G is an interesting case. The G2G was a success. I had to spend a lot of time sitting the ministers for, like, especially Tanzania and Uganda, how it is working. By the way, let me give credit to our market. Our market is very efficient at the import and retail level. The only thing that was hitting them was the dollar availability. And we found them with swaps in banks. They were crying. They could lengthen the swaps. The biggest problem was how the swaps were working. Okay? They will give you insurance, but the dollar is depreciating, then everything becomes a problem when they are repaying it. It was a problem. Let me say, it was also a problem even when I was a governor. But that time the quantities were small and the market was... The starting one was with Mheshimiwa Kimani Ichung'wah, the majority leader, and he talked
Can I just add one,
yeah,
so that you can clear the air?
Okay.
As far as Kenyans are concerned, that did you get government-to-government help with regard to fertilizer? Because we heard it from President Putin when he hosted the Africa-Russia summit, that he gave so many tons of fertilizer to Kenya. It's a matter that has been in the public domain. It'd be good to hear if upon receipt of the same was a value addition or something, or whether, because it must have come in as a grant. I think it's good that this is also be explained.
Thank you very much. I'm going to get an answer to that, because I know we had G2G. We started with getting fertilizer from Morocco, and the whole idea was to negotiate the price, and the entry price was what the farmers were paying. We even provided to KTDA, the tea farmers. So it's something that, let me get an answer whether we got. That was a complicated time for that part of the world. Yeah. The first question was by the leader of majority. The issue is state-owned enterprises and the whole issue of duplication and rationalization. I think you can imagine, Your Excellency, from 2009, when the new privatization law was created, we have not privatized even one institution. It's a whole, can I say, depressing issue that the privatization law was supposed to remove the SOEs that are the government doesn't need, leave those that are just going to be strategic for purposes of helping the market. Now, we are happy that the Parliament has actually approved the new privatization law.
Prof, again, just on that, the need for oversight by Parliament is an issue of concern, even as you privatize. So please, just take that into account.
Thank you, Your Excellency. I think Parliament will always oversight virtually everything. But I just wanted, because I think the rules of the game will still have to be made by Parliament at the end of the day. But I wanted to say the new mode of privatization allows some diversity in terms of what you're dealing with. We are not saying that the Parliament will not be involved. Parliament will be involved. I've listened to some even frontier works in this area in some countries, like Indonesia, for example. And you can actually bring together all the SOEs in one kikapu, and you can rank them. These are the high performing, these are the medium, and below here are the laggards. And you actually transfer their management, not ownership. And you can now then pick up as they become profitable. You can cherry pick in terms of what you want to privatize. And because there are diverse ways of privatizing, this is the route that will go. For us, you can imagine the kind of transfers we make to SOEs. You can imagine the savings. So essentially, this is the journey that we're taking now that the law is in place. Tax regime, I think, again, the next question was tax regime and whether it will be used in the next finance bill. That is what we are working hard to, because we want to make sure that we are well grounded, both in terms of theory and practice, and we make sure that we come up with a tax system that is going to give us that is going to be with us for a long time. What are we looking for? We are looking for a tax system that is sustainable. We are looking for a tax system that is predictable. We are looking for that tax system that is going to give us value for money. Let me give you, for example, one point about the flavor of the current tax system, for example. One of the analysis they have done on VAT, for example, is that 18% of the total VAT goes to refund, VAT refunds. Okay, 18%. Out of that 18% that goes to VAT refunds, it only 95% goes only to two products: bread and milk. You can imagine the next question I ask some of my researchers: who buys milk from the supermarket and bread? Can we have a chat? Anyway, I don't want to go beyond there, Your Excellency. I think you can see what are we trying to do. If 18% of the VAT goes to refund, 95% of that refund is taken up by two products. Then we have to ask, let's find out those who are taking those products. And anyway, that's another level. But I just wanted to, that's a flavor of why we really need to reform. The third question I was asked was about when we talk about corruption, and I tried to decompose this in terms of greasing efficiency and also state capture, or what we call illegal extraction of economic rent, because I wouldn't say corruption. But the most important thing here is that we want to ask ourselves, there is an institutional failure problem, but we have to fix it. Let me give you an example. Some years back, I don't want to tell you when, but you remember when. There was a declaration that any uniformed police officer can stop a vehicle on the road, isn't it? You remember that? What was the reaction by the market? Standardize the bribe to 5 to 50 shillings. So there is no question asked. Matatu stops, it just gives 50 bob and continues. That is pushing institutional failure problem to the next level. I observed this on the road myself. I'm sure you also observe. So you can see we need to step back and come back and say, let's force our institutions let's push our institutions to operate the way they are supposed to operate. I was asked the question about the disequilibrium in the macro space, which also contributed to the nominal exchange rate movements. But also, I think my friend Udai had asked also why Tanzania and Uganda is not the same. They did not interfere with their market. You know, the bottom line is this. When you affect the non-tradable prices, even now, even like this morning, I was still looking at our structure of non-tradable prices. They are still pushing. They are still not yet finished the adjustment process. They are still pushing for the exchange rate depreciation because they are showing there is a disequilibrium. It's a good example of, we used to talk about many years back, the resource problem, the natural resource problem. You know, there are some years that the government was the only investor and it was investing in non-tradable sector. If you make yourself the only game in town, you'll be the only game in town, but that game will not last long. That is what is happening. That is why the nominal exchange rate has to now adjust because it was held constant. Every time I turn, this is my, I think there is somebody who mentioned, my friend Oba, you mentioned that this is 10 months, but I think mine is like 11 months since I took this job. You can imagine the speed at which I have been trying to cover to run some of these things. Where did we fail? Where did the policy failures start? And how can we fix it? Now, Your Excellency, now I come to your questions. One of the things I need to let you know, while I was away after the policy tour, you know, after the central bank, I came back to realize that the tax to GDP, we call it tax effort, was 22% in Kenya. And somebody also made the message clear that Kenya was doing better than all the countries combined. 22% of tax to GDP was the revenue. That was when Kenya government was financing its total expenditure, both recurrent and development, to the tune of between 96% and 98%. I was one of those people who pushed the East African community, especially the governors, to argue that our convergence criteria is 25%. Go ahead and do so much work. And I was looking at it that we are only 3% to go, isn't it, to get to 25. I have come back for another tour of policy duty to realize that we had gone down to 13.7%. You cannot do, it cannot happen unless there's a major structural change. Right now, we are struggling, we are at 15.8%. That's why you see the fiscal gap. The whole issue is that if we move to 9% of fiscal gap, we started accumulating so much debt, so that we have to clear that for us even to think, because it has to be financed. Now, just imagine on the IMF, we have agreed we are moving towards 19%. Just imagine the other countries who are moving on. So in a sense, we have to pay for these policy mistakes, and I think this is something that we feel has really been a problem. That is why, when we are having a fiscal gap of around 5.2% now, even though we had targeted 4%. This 145 billion, it is ranging between 0.9% and 1.2%, was actually being pushed by purely interest rates, expenditure, and because of the depreciation. So it means we have very little flexibility. It means that, because, by the way, by having 22% of GDP coming from tax revenue and financing 96 to 98% of government total budget, both recurrent and development, it means that the government, the government sector was also building up. So it's going to be difficult to say, now let's cut it back today. It has to be financed through recurrent expenditure. Perhaps sometimes we pause the development, the spending. And that's why let me clarify that affordable housing tax is a tax, but it is being used as an intervention in a targeted sector, affordable housing. Well, that's why I'm calling it also at the very end an investment. Now, there are two things that I'm perplexed about. Expanding cities cannot work if we don't have affordable housing. And let's not assume that expanding cities can only be in Nairobi and the major cities. We can also create other smaller cities, satellite cities, but they will be given a boost by this kind of targeted intervention and targeted investment in that sector, because it has a large impact in the economy. It can pull the economy with it, and that is why we are so passionate about it. Mheshimiwa Omar, I do believe that the G2G is an interesting case. The G2G was a success. I had to spend a lot of time sitting the ministers for, like, especially Tanzania and Uganda, how it is working. By the way, let me give credit to our market. Our market is very efficient at the import and retail level. The only thing that was hitting them was the dollar availability. And we found them with swaps in banks. They were crying. They could lengthen the swaps. The biggest problem was how the swaps were working. Okay? They will give you in shillings, but the dollar is depreciating. Then everything becomes a problem when they are repaying it. It was a problem. Let me say, it was also a problem even when I was a governor. But that time the quantities were small and the market was trading in high figures. But you could see the repos. Sometimes you see the repos, they push the shilling by 2 shillings, then you ask what is the problem, they tell you we are looking for dollars, then they say, okay, continue looking for it, the market will correct itself. But that's when there is abundance. You know, the intervention that we do, by the way, somebody also asked why we should intervene. The intervention you do in a floating exchange rate is the one that you actually watch and decide that, okay, if the dollars are the ones that are scarce, I'll push some dollars in the market and withdraw the shillings. Okay? It is an operation. So in a floating exchange rate, even the reserves become part of an indirect instrument of monetary policy. That's how it should happen. If the dollar is becoming the dollar is depreciating because there's so much dollars in the market, you suck the dollars and you push the shillings out. Those are the interventions that markets believe. And because it's a competitive behavior, you're not allocating shillings or dollars. You're actually posting it in the Reuters and let everyone quote. It disciplines the market. Don't forget that in markets where repeat purchases is a good game, it works to discipline the market. And that's why the G2G is good. But you see, let me come back to our market. We are only lifting the oil and coming to the supply, and then the market takes over. Okay? So we are just helping that, and us is a framework agreement. They decide what. Banks are opening their LCs. So many banks are now opening their LCs, so we are happy about that. Yeah, okay. Sorry. Okay, I'll come to that. Cost of living is food and fuel are the main drivers. They are erratic, and you are right. They are erratic. Sometimes you can find inflation jumps to 15%, and within no time, food is available in the market, it goes down by a margin of 10%. So they are erratic. The problem is that they don't form the core. So it means that the decisions we take are also to try and push, tighten monetary policy, and then watch what happens. Right now, the central bank is watching. After 3 months of this, where are we? Can we analyze the results? It's the same thing in the US. They said we pause, but we start looking at it and analyzing the results. Then the other day, I listened to the discussion. We were sitting in the discussion, and the US Secretary, Secretary of the US Treasury said that the core inflation is not responding, but other forms of inflation are responding. If the core inflation is high, then you know that interest rates will remain elevated. Now, let me come to the dollar behavior and some concerns about holding. There is no holding, but there is always self-fulfilling expectations. Let me, what would drive this? First, the Eurobond. I mean, everybody knows about the Eurobond. I don't need to explain it, but I'm also saying it is a debt that was negotiated at 6.5%. For 10 years to be paid as a bullet payment. Let me not comment on it, but let me make a strong statement here. If you borrow at an interest rate, a real interest rate that is higher than your real growth, you are igniting solvency charges. But that is a statement of fact, but we can always debate. Now, Eurobond must be paid. So there are some people who believe that since the government doesn't have the dollars, which is erroneous, the government will go to the market to buy the dollars. So that's one of the factors behind the accumulation, which is self-fulfilling expectation. The other one is that the self-fulfilling expectation is that the dollar will continue depreciating because we have not seen the whole effects being lapped out. That is, the adjustment process is not yet complete. The misalignment was much larger than we anticipated or computed. But it's simple. I've been trying to work out with non-tradable prices to see the extent to which that misalignment has been corrected. But of course, it has also come back because, again, there were so many other shocks. So you cannot disentangle the shocks that are also coming in between. But the other problem is that there is still scarcity of dollars in the market. It is just last week, the ambassador for Egypt came to me and said, we have to sit and think about barter trade. We'll get your tea, but right now we cannot get your tea. It is lying in Mombasa because we have no dollars to pay. We'll get your tea, and you also come and decide what you get from us. And then I said, I'm going to sit and talk to the market. His Excellency the President had to send the Minister for Agriculture, CS for Agriculture, to Pakistan to negotiate barter trade. So we are trying to alleviate these problems. So you can imagine, why is the dollar scarcity? It's because the interest rates in the US has risen as far down from 0.5% to about 5% now. So it means that assets, dollar-denominated assets, are lucrative. And if you assume that the risk profile for the US is quite low, so you can see everybody is trying to say, oh, let's park our dollars where there are higher returns. And finally, I had somebody saying they are parallel market. There is no parallel market. We have a segmented market, and it depends on which segment you go. At times, we can navigate through all those market segmentation, but we have not managed, especially in times of crisis. Market tends to move away and segment further, but it's something that central bank is addressing. Mheshimiwa Eugene Wamarwa, thank you very much for this budgeted corruption. I wouldn't say budgeted corruption because you are trying to officialize or institutionalize corruption. We don't do that. And in fact, in the paper, what you are trying to quote, what I actually said, is that when this issue came up, I said that that is the control of government. COG is an office. They have their responsibilities. If an issue like this is brought to me, I take it to the Auditor General. I want to get the true results. What we have given you is our true numbers. So what we are going to do now is that, because I've already pushed this to the AG, as to the Attorney, not Attorney General, Auditor General, I want to wait for that, because essentially you cannot make a statement unless you have also provided the facts. I have provided the facts to you. Those are the real data. The budgeting issue was answered, but let me put it this way. In times of crisis right now, we are looking for anywhere to slash. But most of the ministries and departments come and try to defend their budget very hard. So it is not, because we start from, I think it is an interesting case, because even when they say this is their budget, when we come and speak to Parliament, they also do their own game and slash where they think is important. And ours is not the final, but we have to do that. But because they defend their budget on the basis of what they're doing, it becomes quite expensive. So essentially, I would like to leave that until, because I would like also flat answers, because we don't want to have that kind of connotation that we have institutionalized corruption. And this is not even corruption. We are calling it budgeted corruption, but this is actually theft of public resources, if at all it was taking place. But if, as a government officer, you come and state that, we want the facts so that we take control of it. And we also take the measures that are required. That's the way I would like to leave it. That's why I made just a short statement of facts and paraded them, and just said that I would have been told, look, I even went further to check, do I have a letter trying to say that there is a problem here? Because essentially we disburse on the basis of the budget. Mheshimiwa Catherine, thank you very much. Cost of living to Kenyans, we know is a problem. We have been here. We have been hit by structural shocks most of the time. I dealt with this crisis in 2011. A severe drought, food shortage, fuel prices were rising. When you combine importation of food, importation of fuel, their impact on domestic prices is more than unity. So it's going to be amplified. And that is where we have a problem, because it can start driving itself. Now, what we have done, and this is okay, adding to the question that was raised by Mheshimiwa Wadai, is that we had the easiest and simplest solution first is bring the food in the market. How do we bring the food in the market? It is actually to import. Because even if you reduce taxes, it cannot solve the problem, because the prices are being driven by the scarcity value. And this is, and you can tell this is more prohibitive than we actually think. So if we import food and exempt them from duty, and we also bring in a very strong mechanism for distribution to bring them into the market, things work out. Things will work out in the short term. But we learn our lessons. That's why we are all talking about climate change, smart agriculture, what do we need to do, the dams. In fact, talking to the World Bank, the new World Bank president, he's talked about we need a big bet for climate change. We start looking at land, looking at agriculture, looking at irrigation and smart agriculture. That will solve the whole problem. It's a whole system of so many things that we really need to do. You are right, Mheshimiwa Wadai, again. I think the market has let us down. I've been looking at the market, for example, for the for public sector debt. That is bond market in the trading. Again, I left that market very vibrant. I even was championing for savings and development bond for 30 years. So we not only have to look at NSE, what is happening, but also how bonds are trading. Because I think I've called the market, especially regulators, we sit and discuss this. We may have started being beaten a long time ago, but we want to reverse this tide. And you are right, your observation is correct, because essentially, if you are trading your shares and there is no predictive behavior, or there is what I may call conflict of interest in terms of how the market is allocating those resources, that market will not survive. And market is our savior here. And that is a very important issue that we need to bring up. So, from the combination of what I said earlier about where we were in terms of the government, the size of government, the taxation, tax to GDP, and how it has declined, we have retro space. We have no fiscal space, even to change direction. Somebody even asked me, where is the money for El Nino? When we went to discuss the El Nino and the emergency response, the first thing I said is that we have to have 3 lines of defense. The first line of defense is that if El Nino strikes, we are going to see how we reallocate our budget at every ministry, at every county government. The second line of defense is government will look for its own resources, how it can reorganize to salvage the situation. And the third line of defense will be our multilateral institutions have components of these crisis measures. So we are doing that, we have activated that. But in a sense, we also came back and could not process information properly because the information initially was there will be El Nino. And then after that, there was mild discussion about El Nino, and then a full-blown elaboration by the meteorological department said we may experience heavier than normal rains, but not El Nino. So everybody went back to the back seat, but now the reaction we are seeing and the pictures and even the experiences from people in those areas we are seeing is that we have to activate the initial program of how we deal with it. The whole issue, I think I've touched most of the things except the one you wanted me to touch. I think we have worked on it. I've touched most of the things. Let me say this. I will make sure that I think we haven't brought fertilizer from Russia. I can say we are not so sure. We haven't got information yet, but I do know that we brought in fertilizer from Morocco because that was the first impact. Let me say this. The most important thing is that when we are in a crisis, we have to come together and see where do we think we can resolve the crisis. Right now, the front line, all of us should be, let's import food so that duty-free, so that we actually solve the hunger problem right now. We use the resources we have to solve the El Nino. Then after that, we'll be saying, since we don't want to be beaten again, we want a sustainable model of economic development that is going to support us. Let me say, the point that she was making about capital accumulation, affordable housing is an investment model. That investment is going to support our capital accumulation. I've been working even with other people like Justin Lin from China in structural models, and he said, our capital accumulation is so low that we cannot ignite economic transformation. Why? The bottom-up economic transformation agenda by Kenya Kwanza is there. Economic transformation is actually going to be the answer for our economy. But it will not happen on its own. We really have to work, and that is why we need interventions like the one he's talking about, affordable housing, a Hasra fund, all other interventions that we are parading are going to be very, very important. Because this is what will make us sure that in future, even when we are hit by crisis, we have flexibility to deal with the crisis. And that is where we also have fiscal space. Fiscal space will signal fiscal consolidation and then sustainability. I think I stopped there because I think most of the other issues were touched on in a different way. Thank you very much.
Coach, I think the issue of Russian fertilizer was not an importation by the government. It was a donation. And I think it came from the Russian side. And Kenya was listed amongst the beneficiary nations that received a donation from Russia of fertilizer. Whether we receive in times of crisis, if we are receiving, and when I was at the Ministry of Devolution, whenever we receive a donation of rice from China, we declare. Has this been declared? Has it been confirmed?
I will refer it to the Ministry of Agriculture, and I will come back to you, Mheshimiwa Wamarwa.
You come back to us, Prof.
Yes.
You will not come back to...
Okay, I'll come back to you because I don't have that information.
Thank you.
We were trying to get to the minister as we were sitting here.
In fact, the figure, if I correctly remember, was 34,000 metric tons. Yeah. Okay.
Excellency, just one last thing. If you do, I know we're all tired. Professor, you said that this whole thing of the G2G was supposed to add dollars into the market. So by Churchill's own submission, you have therefore put about $3.4 billion into the market by deferred payment. Number two, you're saying Pakistan and Pakistan and Egypt, which is the biggest importers of tea, are saying we don't have dollars, so they want you to barter with them. So is this dollar crisis nearing an end anytime soon?
Thank you. Actually, we wanted to save dollars, not to add to the market, because essentially the export sector was demanding so much dollars every month. In fact, every month it was like, can you intervene? Can you give us reserves? That's what they were telling the central bank. So we wanted to save that situation so that, one, the volatility it was creating was massive. Two, the quantum of dollars it was now buying, even though they will come back through shillings and then again transform, was quite massive. That's one aspect. The second aspect is that we are still in a dollar global shortage. And that is why countries like Egypt and Pakistan wanted to do better trade. If you look at even the Eurobond for Egypt, the way it's trading, last week I checked, it was trading at 24.3%. It's a crisis. Just imagine how your Eurobond is trading at we went to 18% and we have come back to 12.4%, but we are still screaming. You can imagine them, they had to go to the market regardless of what was happening because they had to salvage that.
Okay,
so,
I think we need to bring
something that we can solve.
We need to bring this to a conclusion. Are you sure, Eugene?
No, just a clarification, because Prof said about the issue of importing more food. But we are aware, and I think Senator Omar referred to it, we had about 24 billion that was, allocated for importation of food through KNTC. And somehow we never felt the impact of reduction of price. In fact, they were selling the imported food higher than the local. And many Kenyans consider it a fraud. What do you have to say about that?
Actually, we haven't got all the foods that were earmarked for importation. That is why the impact has been slow to be felt. But some of us who go to the market, we can see that the impact has been positive. The whole issue is that, for example, I have some people telling me that they had all the consignment of rice from India, but India just crossed selling any rice outside the market. And this is again information that's out there. They are now trying other countries. The whole idea is that most of them thought that they would get some of these products from the commercial market, but then it has become problematic. So in a sense, what I think is happening is also market search costs are becoming very high because some countries are reacting because some of them don't know whether this supply problem would be persisting.
Thank you. We thank you and your team, Davis, for coming before us, and Abraham. We had you, P.S. Singa. These are difficult times, and that's why we felt we needed to have this conversation with